Okay, question 4 is dealing with manufacturing entity for 40 marks. So again, you quickly take your calculator. How many minutes do you have? It's not shown. You say 40 times 0.6. You've got 25 minutes to do this. And we read our question. We've given the information for Mattress Magic, which is a mattress manufacturer. The business produces, this was actually an error, there should be mattresses. The financial year ended on 30 June 2014, always important. And let's look at our required. We asked to do the fixed or the factory overhead notes, production cost statement. Then there's a few questions on break-even analysis and 1 or 2 theory questions. And we've got our information. We've got our stock balances, just quickly orientating ourselves. We've got transactions for the financial year that ended on 30 June 2014. Transactions got information regarding materials, indirect materials, factory rent, water and electricity, okay. Then point number G has got information about labor, pay, hours that laborers worked, etc. Information number H, information about employers' contribution to a pension fund, so that's also got to do with labor. And lastly, we've got some info on selling and admin costs, and then some unit information, which we know we may need for break-even analysis. And again, some break-even information there at the bottom. Okay. So let's start with the first one. Prepare the following for the year ended 30 June 2014. Factory overhead notes and the production cost statement. So which items do we find in the production cost statement? What are we calculating when we're calculating the total in the production cost statement? We've got 3 things that always make up the cost of a product. Okay, you've got your direct material, the direct labor, the overheads, and then you've got the change in work in progress. And what are you calculating by adding all these figures together? You're calculating how much did it cost to make a product. It's really what you're calculating. You're calculating how much it costs you to make 1 unit. Okay. The factory overhead note is just a note that is going to help us to calculate the overhead figure as part of the production cost statement. Sorry, you're not calculating cost for 1 unit, you're calculating the cost for all the units that you've finished. Okay, then the information also told us that there's no work in process carried in this information, so we'll not have this part or this part. So we'll only have materials, labor, and overheads, because those are the things that we need in order to make our products. Okay, so let's start by reading our additional information. Stock balances. Raw materials, opening stock. Which one of these figures is opening stock and which one is closing stock? Yes, 1st of July is our opening stock, 2013, and 30 June 2014 will be our closing stock, because that is the last day of the financial year. So there we go, there's my financial year, 1st of July 2013, that's the first day of the financial year. Right, so where will we fill this in? Where does this go in our production cost statement or our factory overhead note? Yes, production cost statements. So we go to our statement here. We've already got some of these figures filled in. What is the prime cost going to be made up of? Direct materials plus, yes. Why is this prime cost again? Okay, these are the things that are directly related to the product. It's like if you're making a table, direct material would be wood, and the person that is assembling the table, putting it together. Okay, that would be your direct labor costs. So that would be your prime costs. And if you take your prime cost and you add, yes. Okay, so very important here to know your formats. You shouldn't even think 1 second about any of these. Immediately when you get this, you should put down your format, and then you should go and fill in the necessary information. So we know direct materials. How are we going to calculate the direct materials used in production? We're going to take our opening stock, we're going to add our purchases, we're going to subtract our closing stock. Okay, if you've forgotten how that works, have you? Okay, so our opening stock is 42,440. How many raw materials did we purchase during the year? 500,000. There we go. As you use the information, you can tick them off. That's just exam technique. Plus 500,000. Make sure you put down your calculations. If you just put a final figure here, no marks if you get it wrong. And our closing stock is 36,800. There we go. Right, so we've dealt with that. What about this information here, the cost of transporting the raw materials? Should that form part of the cost of raw materials? Yes, it should. Okay. Yes, we need to pay for the transport in order to receive the goods. So everything that is necessary to get the goods to us is going to form part of the cost of those goods. So we need to add the raw material cost there of 3,400. Right, so we've added this as well. And then if we add this all together, we're going to get 536,040. Right, let's go on to our the next piece of information that we get. Let's just take it systematically. So we're done with number 1, we're done with 2A, let's go to 2B. Indirect materials used in the factory amounted to 48,440. So where are we going to record this? This is, first question we ask, is this part of making the product? Yes, it is, because it's used in the factory. It's part of making the product. It's not directly related to the finished product, but it's definitely part of the process of making the product. So if it's part of making the product, it's going to be in our production cost statement. Right, now the next question we ask is, where in the production cost statement are we going to include this? Is this material? Is this direct material? Is it direct labor? Or is it overheads? And this is overheads because it's indirect materials. Okay, so do you see the two questions that you ask? First one is it related to the cost of the product, cost of making the finished product? Because it's in the factory, it's part of making the product, so we're going to include it in the production cost statement, and then we decide which one specifically, materials, labor, or overheads. So this is overheads, so we can fill that in our factory overheads, indirect materials, $48,440. Right, that one is done. Factory rent is 6,800 per month. The rent for June 2014 must still be paid. First question we ask is this part of making the finished product? Do we need to pay for the factory rent in order to make the finished product? Yes, we do. Without the factory, we won't be able to make our product. So this is going to be part of the production cost statement. Next question. Where in the production cost statement? Is it direct material? Do we find this factory rent as a material in the finished product? No, we don't. Right? Is it direct labor? Is this for paying someone that worked directly on the finished product? No, it's not. So it is. Everything else is overheads. And it's 6,800 Rand per month. How many months in the year? 12 months in the year. So the total rent for the year is going to be 6,800 times 12. That was very easy. Okay, what they could have done is they could have told you that the total rent amounted to 10,000 Rand per month, and it is split between the factory and the admin department in the ratio 5:2, and then you have to go and work out specifically what portion goes to the factory and what portion goes to the admin department. So yeah, we just told everything is factory. Okay. 6,800 times 12, what's the answer? 81,600. Great. Next one, water and electricity paid 90,600. Right, so now we're told 80% of this must be allocated to the factory. So is this part of making the finished product? How much of the 9,600 is part of making the finished product? The portion that relates to the factory. So we're going to find 80% of 9,600. Is it material, labor, or overheads? Okay, overheads, so water and electricity. And be sure to show your calculation. It's going to be the 9,600. How much of that related to the factory? 80%. The remainder related to the admin department. So that would be forming part of the income statement if we were asked to do the income statement. Okay. 9,600 times 80%, 72,480. Right. Good. The insurance expense was 46,000. This must be split between the factory and the office in the ratio 5:2. Now remember that with the manufacturing entity, we've basically got our 3 different departments or functions. We've got the factory, that's where they make the product. You've got the admin department or the office, that's where they actually issue the invoices, all the documentation and do the accounting and the IT, etc. And then lastly, we've got our sales and distribution department. Okay, and cost can be allocated to any one of these. If it's going to the factory, it's part of the production cost statement. If it goes to the admin or office, it will be part of the income statement. If it goes to selling and distribution, it will be part of the income statement. Okay, so this insurance expense, some of it relates to the factory and some of it relates to the office. So the total is 5 goes to the factory, 2 goes to the office, and the total parts is then 7. We know that the total cost is 46,000. Right, so we can again do our shortcut here. We can say, take what we have, multiply by what we need over what we have. This we're going to get from where? The ratio, yeah. And this is my ratio. And this we're going to get from our actual information, 46,000. So we're looking for the portion that relates to the factory. Okay, so how much relates to the factory? 5 of the 7. Right, so that's insurance. That's going to be forming part of our overhead expense. How much? We've got 46,000 is the total. How much of the 46,000 relates to the factory? Well, if we divide that total by 7, you're going to get 1 part. But we need 5 parts relate to the factory times what we need over what we have. We need the factory, we have the total, so 5 over 7, and that gives you 32,857. Okay, another way to think of this is to say, let's get one part. And you say 46,000 divided by 7. That gives you one part. And the factory needs to get 5 parts. Okay, so you can choose whatever you feel comfortable with. The final answer is going to be 32,857. Easy so far. Hey, this is easy marks. Very much. We're not asked the income statement, so we don't need to worry about the other two. But if we're asked the income statement, you must remember to also include that in the income statement. Right, factory sundry expenses amounted to 42,644. What is sundry expenses? What does the word sundry mean? It means general, it means other. It's kind of for everything else. Okay, all the other expenses that related to the factory. If you see the word factory, you should know this relates to the production. It relates to making the finished product, and it must be part of production cost statement. Okay, so factory sundry expenses amounted to 42,644. This is part of making the finished product. It's not direct materials or direct labor, so it's going to be, yes, sundry expenses under overheads. And no calculation here, given the figure as, let's just see, 42,664, is that right? Okay, that figure has been given to us, so we can ignore it. It's already been given there, 42,664. Right, that is my factory sundry expenses. Then, point number G. And this is probably the tricky one. The factory has 4 workers. So here they are. 1, 2, 3, 4. So there is Karabo. And they each worked an average of 160 hours per month at 50 Rand per hour. That's normal time. So that's the normal hours that these guys are working. The overtime records for the year reflected that the 4 workers worked a total of 500 hours of overtime for this financial year. The overtime rate is 75 Rand per hour. The overtime hours worked related to general work pressure, and it could not be traced directly, so it's not traced directly to a specific job. Now, first question we asked, like with all the others, is the payment of these factory workers, is it related to making the product? Yes or no? Yes, why? Because it is factory workers. Right, then once we've got that, now we know it's production cost. Now we need to decide, is this direct material, direct labor, or overheads? Well, we know it's not materials, it's laborers. Okay, so it's either direct labor or it is overheads. Right. They each worked an average of 160 hours per month at 50 Rand per hour. That's normal pay for normal work done on a finished product. So what do you think that would be? Direct labor or overheads? No. Okay, let's just check again. This is for normal time. Okay, so the normal time we can include as part of direct labor. So what is the total amount that we've paid for laborers for normal time for the whole year? See if you can calculate that. Right. So here we go. We know they each of the 4 people work 160 hours. They're paid 50 Rand per hour. Okay, and that is per month. How many months in a year? 12. Right? That is then the amount we pay for 1 worker for 1 year. But we've got 4 workers, so we multiply that by 4. That's going to give us 384,000. Okay, so let's put that in, our direct labor. We've got, and again, put your calculation down. 160, then you can get part marks if you do it incorrectly. Times 50 times 12 times 4 is 384,000. Let's leave it in the bracket for now, just in case there is any more direct labor costs. So if we look at our information here, point G, we've dealt with this first sentence. Okay. Now we're looking at the overtime. So that was the normal time. Now we're looking at the overtime. The overtime shows that the 4 workers worked a total of 500 hours for the whole year. So we've already got the total hours for the whole year for them, and the overtime rate is 75 Rand per hour. Now they're going to give us information to help us to decide whether it's direct labor or whether it's overheads. If it relates directly to making a finished product, it relates to a specific finished product, then we can include it as part of direct labor. Otherwise, it's going to be part of general overheads. And the information tells us that overtime hours worked related to general work pressure. And when you see that general, you know it's going to be part of overheads. And then they even go further and give us more information. It could not be traced directly to a specific job. So then you know all the overtime hours is going to form part of overheads. So what's the total amount paid for overtime hours worked? We've got 500 hours. So we can put here indirect labor. $500 hours, multiply that by how much do we pay per hour? 75 Rand. That's going to give us the indirect labor related to overtime. Okay, happiness. That is the overtime. Next one. So we've done number G. H. Total employer's contribution to the pension fund amounted to 8% of the normal time wage. Okay, now we can ask ourselves, was the pension fund contribution, so this is money that the company puts away for what? To save up for the factory workers' pension. Right, so is this directly related to making the finished product? Not really, eh? This is simply to make provision for their pension in 40 years from now. Okay, so this is not going to form part of direct labor. This will also form part of my overheads because it's not directly related to making the finished product. Everything related to the normal time work will be direct labor, but pension contributions is not the normal wage. This is something over and above their normal hourly wage that gets contributed. Okay, so that's why it's going to be forming part of, forming part of overheads. So 8% of the normal time wage. What is 8% of the normal time wage? We said it's going to form part of overheads. So we've got 8%. What was my normal time wage? We already calculated that here. 384. So we can say 384,000 there. 8% of that is going to be your pension fund contributions. Happy with that? And this is all part of my indirect labor calculation. Right, so now I've got more information on labor. Indirect labor in the factory compromises the factory foreman, right, who earns 118,000, and a cleaner who earns 38,000. I've already told us that this is indirect labor, but if they didn't, ask yourself, does the factory foreman do work directly on the finished product, on making the finished product? What is the duties of the factory foreman? He's kind of fulfilling a supervisory role. He just checks if everybody is doing what they're doing. People have a problem, he deals with that. Okay, so he's not working directly on the finished product. So whatever we pay him is not going to form part of direct labor, but indirect labor. All the indirect cost forms part of overheads. Okay, so the 118,000 part of indirect labor, and exactly the same with the cleaner. Okay, the cleaner is just responsible for cleaning, so she doesn't work on the mattresses or on the machines. She just cleans the factory, so everything we pay her. And the cleaner earns 38,000 per year, inclusive of employers' contributions. We've got one more sentence here. It says the cleaner spends half of her time in the factory. So we've paid her 38,000 Rand for the year. Only half of that relates to the factory. So how much of it needs to go into overheads? Only 50%. The remainder is probably going to go to the admin department. Okay, so we need to put 38,000 times 0,5. Great. That is number I, done. Okay. Right. Point J, total selling and distribution costs amount to 165,000. Is that part of the factory? So these two costs do not relate to the factory at all, so we don't have to deal with them when we are doing the factory overhead note or the production cost statement. It's only the production cost that goes to the production cost statement. Admin and selling and distribution costs will be part of the income statement. Right. Then it says these totals take into account all the adjustment listed above. Right? Why is that important? If it didn't, then we would have had to include everything that related to the admin or the sales department. So the wages for the cleaner, half of it that goes to the admin office, 20% of the water and electricity that needs to go to the admin office, and 2/7 of the insurance expense that also goes to the admin office. But luckily everything is already in there, so we can just tick that off and know that's additional information. The last 2 points here is selling price per unit. It's got nothing to do with our production cost or the cost of making our product. Variable cost per unit, also not. That is information that we need for break-even analysis. And the same with point L. We will see that when we get to the next question. Okay, so we've actually dealt with all the information that is relevant to the factory overhead note and the production cost statement. So we can now just go and total these and get our final answer. Alright, so we start with our factory overhead note. Indirect labor, if we do the calculation there, we add everything together, we're going to get 205,220. Please be careful when you use your calculator. That is giveaway marks if you make a mistake. Right, so then we total all of these amounts together and we get a final total of 483,261. Okay, what do we do with that figure? We're going to take it to our production cost statement. So you're going to fill in that same figure, even if you got it wrong. If you filled it in here, you're going to get your carry through marks there. Direct labor, we've calculated, but there were no additional direct labor costs. So we can fill in that total there, 384,000. We can then calculate our prime cost, which is the total of these two figures. That's going to be 0, 4, 0. 4 plus 6 is 0, plus 1 is 2192040. Finally, we just total these two figures together, then we get 1, 0, 3, 3, 0, 1, 4. Okay. Happiness. And that was actually very easy. So we just took the information step by step. Every time we asked ourselves, what are the two questions we asked? Okay, so we asked those two questions. Is it related to making the finished product? Then we know it's a product cost. If it's not related to making the finished product, so let me just go here quickly. If it's related to making the finished product, then we know it's a product cost, part of the production cost statement. Otherwise, it will be part of my income statement as either admin cost or selling and distribution cost. Once we know it's here, we need to ask, is it direct or indirect? And direct, we've got the split, is it material or is it labor? And indirect, everything will be overheads. Okay. Right, question 4.2.1. Calculate the number of units the business needed to produce in order to break even. What does this mean? This means we need to calculate how many units the business needs to produce and sell so that they actually make a zero profit. Break even means their costs is going to be equal to their revenues or their incomes. Okay, so they actually make a zero profit. So when will this entity break even? Well, break even when the contribution, remember that the contribution or the marginal income statement, which is also known as the short form income statement for a manufacturing entity, can be written as follows: sales minus variable costs gives you contribution. Okay, and contribution less fixed costs is going to give you the net profit. So we can say our net profit is equal to basically contribution minus fixed costs. So in order to calculate the break-even point, simply use our formula. Fixed costs over contribution per unit. What is my contribution per unit here? Go back to the information. They say the selling price is 110 Rand per unit. The variable cost per unit is 65 Rand. So my contribution is, it's going to be fixed cost over 110 minus 65. Next question is, what is my fixed costs? And this is a little bit more tricky because they didn't tell us what our fixed costs are. Right, now with the fixed costs, generally speaking, we've got our three types of costs. We've got our factory costs, or our factory overheads, and we've got our selling and distribution costs, and we've got our admin related costs. And which ones of these do you think are generally fixed costs, and which ones do you think vary with the volume of sales? So it's fixed if, regardless of the number of units we sell, those costs are going to stay the same. And it's variable if it changes with the volume of units that we sell. So which ones do you think are generally fixed and which ones are generally variable? If you think of the cost that's normally included in factory overheads, it's normally rent, it's normally labor, okay, it's materials, okay, indirect materials. and indirect labor. Alright? Depreciation, etc. Normally most of these costs are fixed, like your rent is normally fixed, the depreciation is normally fixed. These may vary, but as a general assumption, we can say that our factory overheads are generally fixed costs. Our selling and distribution costs, these are sales commissions, etc., and those vary. The more units you sell, the higher the selling and distribution costs. So these ones are normally variable costs. Okay. Then my admin costs, which costs form part of them? It's rent, again it's salaries, insurance, okay, water and electricity, etc. Again, you can see these ones are generally, they don't really change. If you sell 10 units or 100 units, these ones are generally going to stay fixed. Okay, that's why when we're going to calculate our fixed costs, we're going to take the admin costs and we're going to take our factory overhead costs. Okay, so that is 483,261. And can you see why it's important to show your calculations? Because this is open to interpretation over 45, is that right? And my final answer is then going to be 15,592. Now, if you subtracted the indirect materials from this calculation, if you said, no, indirect labor and indirect materials, these are very much related to the number of units that you sell, then I would have said, all right, that's correct as well. So you can make your assumptions and you can write them here. You can say, if you wanted to, you could have said, assume indirect labor, indirect materials are variable, and therefore you say 483,261 minus whatever your indirect material costs are. You could have done that. Okay, but this is the solution in the memo. But again, it's not set in stone. Fixed costs are those that don't change with the volume of sales. Okay, happy with that? Any questions there? Okay, that was just an explanation I gave. Briefly comment on whether the owner would be satisfied or not by making reference to the previous year's figures as well as the amount calculated in 4.2.1. So, we've got our break-even point. So here it helps to put down the figures so that you can see. The break-even point in the current year is 15,592. In the previous year it was, hold on, I just want to verify that. It was 9,800. So it has increased. So you just state the obvious. Break-even point has, don't use abbreviations, has increased since the prior year. Do you think that's a good year or good thing or not? Hey? No, it's not a good thing. That means in order just to make a zero profit, you now have to sell a lot more units just to break even. Last year you only had to sell 9,800 units to cover your costs. Now just to cover your costs, you need to sell almost 16,000 units. That's a big increase. It's increase since prior year, meaning that they will have to sell a lot more units. Okay? So I would say, would the manager be happy? I would definitely say no, because break-even point has increased quite drastically since the prior year, meaning that a lot more units will have to be sold to break even. Need to be sold to break even or to cover costs. All right? what other figures are we given here? We're given the total number of units produced and sold. And we've only just made more than the break-even point. Okay, so our production and sales figures only just exceed the break-even point. Is it production figures? Yeah, production and sales figures. And sales figure of 17,800 only or barely exceed the break-even point, which means you may not make a significant profit. Okay. Right, so management may be concerned why the fixed costs have increased or whether the contribution per unit has dropped significantly. So management may want to investigate which costs have increased, which fixed costs have increased and why, and maybe do a little analysis and see if they can do anything about that. Okay, so just give a satisfactory reason to go with your answer. And also important to quote figures. Break-even point has increased since the prior year, and you can put the increase here, and then you can say 15,592 minus 9,800 equals a, what's the increase there? And you put whatever the increase is there, and you put it in. What is it? 5,792, sorry. Increase. Happiness. Right, do you think that the government should limit the import of goods into the country? Here again, you can have a look at the memo. And again, it's a yes or a no, and you just substantiate it. Yes, they should possibly limit the import of goods to give local suppliers a better chance at breaking into the market and to grow themselves and to grow their market share. No, you can say no, you should give customers the opportunity to buy and to whatever they like. And again, so whatever you say yes or no, just make sure you substantiate that. Here we go, yes or no, yes, to give local producers a better chance at growing. No, they say free enterprise people should be given the opportunity to purchase according to their choice or to their income. So you should give that liberty, so you can choose either one. Chances of getting the same question like this is very slim. Again, answer the question yes or no and give a logical explanation. If it makes sense to you, you'll probably get the marks. Okay, just don't write nothing. What can Mattress Magic do to stay in business? Provide 2 suggestions. And here's just a number of suggestions. They can look for cheaper suppliers of their material without compromising their quality. What else can they do? Well, to reduce costs, they can buy in bulk and get discounts, right? Furthermore, they can try and find cheaper transport entities or reduce their transport costs. And lastly, they can increase their market by advertising. Right, so they can either increase their market share or they can reduce their costs. Okay, so think of it like that. What can they do to improve to stay in business or to improve their business? Increase their income or reduce their costs. How can they increase their income? Advertising. Increase their market share. Maybe start an online business. Suggestions like that. How can they reduce their costs? Maybe they can buy in bulk. Maybe they can find cheaper suppliers. Things like that. Alright. And then the last, let's just go back here. Last point they mention here is they can introduce different products. Try maybe a different product range and just make sure they use their wastage and perhaps sell off their waste materials.